It is 9 o'clock in the 26th. We're about to wrap up the month of February, even though we're stretching out on Thursday for a leap year with the 29th. So, for all you leap year babies out there, enjoy your one birthday every 4 years. Let's get into the risk disclaimer. We know there's risk in trading. Please and always use trade capital. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal there. All right. Let's take a look at the charts. Good morning, traders. Good morning, everybody. Posting that in the chat. Pre-market, we're looking about a 60-cent upside on the SPY right now. I wanted to bring up these charts and just discuss news this week. We have PCE, which is the primary inflation tool that the Fed will be watching. If we looked at the Trueflation measure for the U.S., we'll go CPI dashboard. I saw this last week and we were sitting under 2%. So here's a sub 2% inflation reading for the US. Again, does it spike up? Does it range? Possibly. We'll figure it out. But CPI numbers continue to improve. The market certainly seems to be happy out of the gates this year. Concentration is, Mag 7, remove Tesla a little bit. NVIDIA is fourth largest company in the world. Semiconductors can do no wrong. It's all about AI. Certainly a better vibe out there with soft landing, no landing, recession getting kicked down the road, recession maybe not happening. Fed still firm on the language, cutting rates possibly this year, but the market's expectation was like 6 or 7 rate cuts, and now they're looking at 3 to 4. So I think, again, a lot of this is being priced in, which is why we're starting out so strong this year. If we go to the sector year to date, cute picture. Year to date, 6.69% in the S&P 500. Your sectors that are outperforming are led by just a few. I mean, it's pretty wild how the big best performers are at the top of the food chain for these sectors. And dragging these sectors higher with the weighting. Communication services, look at your weight. Meta, Google, Netflix. Those are 3 household names. You throw Disney in there as well. You got 1, 2, 3, 4. I'll put Google together as 1. So 4 companies that are just crushing it, right? Google, not so much at 3%, but Meta 36.75 for the year to date. Netflix nearly 20%, Disney nearly 20% after earnings. Go into financials, it's Berkshire Hathaway. That's really what's leading the financials. Take a look at index weight again. Berkshire Hathaway is the largest holding, just above JP Morgan, 13.68%, and it's up 17% for the year. So while your financials that are typically low beta, more protective stocks outperforming, Berkshire Hathaway's having a great year. Healthcare, Eli Lilly. If you look at the weighting, Eli Lilly is now the largest as far as weighting over United Healthcare or United Health Group, Johnson & Johnson, Merck & Co. And Eli Lilly's up 32% for the year. Industrials hanging in there, doing okay. Look at the weight, General Electric, Caterpillar, Uber. Uber's crushing it. General Electric's crushing it, 20%, 27%. So, big companies with a lot of index sway, I guess, out of the gates with a good year to date. And then you go to technology. That shouldn't be a surprise. You go to the weight, Microsoft, Apple. Apple's actually down for the year, which is, it really is interesting. Like everything across the board has been up. Apple has taken it worse than others, I would say. But I still think Apple is a good value. I think there's going to be plenty of buying the dip on Apple at the 180, 182 level. NVIDIA, of course, one of the best stocks performing, 60% this year is 59.16, just ridiculous. And Microsoft up 9.12. So that's your snapshot sector-wise. Let's go to the charts. I just want to show all this. This is important to note. I think that highs are likely. We've been talking about this the last couple of weeks. We just keep melting up higher and higher and higher. If it wasn't for NVIDIA last week, I feel like the week would have struggled. NVIDIA earnings on Wednesday after market single-handedly lifted the entire market up. We had fresh highs on Thursday and then a little bit of a dip on Friday. I actually sold the market on Friday. I did a 5-10 put If you were with me in session on Friday morning, I did that trade during the live market. So it was, I basically paid $1.16. I closed it out for $2.55. I think the most I saw it trade for was around 280. So I was pretty happy with the exit overall. Trend lines on all these. So here's the SPY. The real bear side has to be on the right hand side of the trend line. It's not necessarily going to come in a straight line. We might struggle or stall or have some indecision this week. But if this melt up rolls over, I think a correction is likely due. And again, correction could be single digits. I mean, it doesn't have to be anything crazy. It's just markets making highs. I mean, we had a pullback here that I think was less than 2%. So this high to low, I mean, the market dipped 2.5%, and then we had a new high again. So couple of things. We either just keep having 2 to 3% corrections, and then the market hits all-time highs, or we have something a little bit more meaningful. Maybe that 5% correction, maybe that 5 to 7, 7 to 10, of course. Anything above 10 means like scarier corrections and retracements. I still think it's buy and dip for right now. My runway, as far as looking to be fairly aggressive and fairly bullish overall, is until we start to see a rate cut by the Fed, which is most likely going to be May or June. So I do think going into this week, as we wrap up, we still have a trading week through the 29th. So that's Monday through Thursday to finish up February. Go to March 1st. I want to take a look at some of the open interest levels. Let's go to March 1st. I think I looked at this last week as well. Let me refresh this. And let's go. Nice to see everybody this morning. Okay, let's give a shout out to everybody. Chris, you're always like first in the house, man. It's impressive. We got Sergeant Keith. We got David, FK, Herschel. What's happening, sir? LG, Jan. Good morning. Nice to see everybody. Okay, open interest March 1st, calls and puts. We do have some sprinkled. It's interesting to hear the big one is at 500, which means I do have a butterfly position that is a 502 by 499 by 505, and then a 503 by 500 by 506. If we start to work our way back into that 500 open interest level this week, then I'm going to be looking to take some profit. So I mean, obviously, if it's going to pin at 500, that's not going to help my butterfly positions. But if we at least gracefully work our way back through before Friday, then there could be some pretty good profits there. On the upside, I see a 512. We zoom in here. So we have some open interest today at 508. We have a 512 and we have a 514. So that's on the SPY. So 512, 514. I might look to see, I mean, we're starting out here around 508 for the week. If we have an upside, I might look at like a 515 by 518 by 512, somewhere in here. If we somehow get up to 520, or butterflies are great. I mean, they don't cost a lot. They're not super high probability, but if we, drift up here and get paid, it typically works pretty well. If we fade back down, same thing. Like the reward to risk is great. You just have to be very accurate on, that price, and time has to pass, and it's getting closer and closer to expiration. I would say that if we go to a different instrument like the Qs, I want to see what that looks like. Or can't I? Hopefully this website will give me the Qs. Guess not. Unless they're going to charge me some premium thing. Or could I just check open interest on TradingView? Maybe I can. Let's see. Yeah. All right. I'll figure out where those open interest levels lies in the Qs. But we're looking at 512 to 513 in the upside for right now for this week's expiration on Friday. And then we have the big 500, which is pretty notable. And again, this doesn't mean that price has to fall back to it. These are call options. So these call options are, in the money. If anyone's like long calls, you can see that the put call ratio 1.74. So we're going to see. Also, let me bring up my software here. Oops. And see what it looks like for some of the big levels this week. So I'll bring this up. Look on the higher time frame. Let's go back to the charts. So overbought conditions with divergence. And here is an easier way to see that. We're sitting here just kind of, pinned to the highs on the relative strength index. You can see the divergence. So price is making higher highs, not making higher highs in momentum. And then we have slight hidden bearish divergence on the technicals with RSI as well. The DIA shows us almost the exact same thing. Divergence with momentum, divergence with relative strength, pinned at the highs. Qs, same thing. Higher highs, pinned. Again, just getting ready. I know we might not see it right away. Is there a catalyst this week that's going to drive us lower? PCE potentially. And what would be that number? If we go to this week for the news, what would be the number for PCE? Well, we've got monthly core PCE at 0.4%. This is a primary inflation tool for the Fed. This is where it's primarily looking at just what consumers are spending, right? So differs from core CPI that only measures goods and services targeted towards and consumed by individuals. Okay, CPI is released about 10 days earlier, tends to garner the most attention. But this, what it says here, why traders care, it's Federal Reserve's primary inflation measure. All right. So does PCE come in higher than expected? Well, previous print was 0.2, forecast is 0.4. So does it come in higher than expected? I don't know. We'll also find out with unemployment claims. Are we going to see just steady 200K in unemployment? We have PMI numbers on Friday morning at 10 a.m. plus a consumer sentiment report from the U of M, which consumer sentiment's been pretty darn high. I mean, if we look at see if I can find the CNN fear. Actually, let's go AAII first. AAII sentiment. Let's look and see how greedy people are right now. We are sitting at 44.3, so pretty bullish. Right at the gates this year, we're at 49. Historical average is 37. So you can see we're leaning towards, certainly more bullish. All-time, or not all-time, but one-year high is 52.9%. That ended December 2023. So as we got into that final week and that big holiday push, November, December, that was a week we started to see a little bit of a high form. Anyway, so that's where people are at. And then we look at the CNN fear and greed. Let's go fear and greed index here. And I had a feeling we're going to be on the right side of the scale. So we're getting into some extreme greed, which is interesting. And yeah, I mean, so you could argue that the trend, the rally is kind of long in the tooth right now. Maybe the stock market's getting a little bit ahead of itself. We need to price in some reality here. So anyway, that's what I'm seeing. Let me get out of here for a higher time frame. Talk about a couple of levels on the 315 expiration, 419 expiration. I was hoping I could see something for. Those are all pretty quiet. I was hoping I could see something for March 1st. Those are just going to the monthly expirations. All right. Levels today to watch. If looking at the SPY, we're trading right in between. Big contract level of 510, big contract level of 505. We're looking at a 508 to 508 and change opening. Yeah, we'll see if 510. If 510 holds as resistance, that's another spot. That's where I sold it last week. So I bought a put at 510 that paid out pretty well. If 510 holds again today, I might look at the same thing and just have a couple dollar range until price does something different. So I'll look at that in the short term today. Keem, good morning. Catherine, good morning. All right, so we're extreme greed. Cool. Does that mean that I'm just going to sell the market and go stick my head in the sand? No, just means we wait for confirmation. Here's the A1 Edge Finder. We're looking at some pretty nice setups here. Pound Aussie, great setup. Let's take a look at that one. CAD Yen, Pound Dollar, CAD Swiss. CAD Swiss, I'm super bullish on. Euro Aussie, we've been bullish on that one for the last couple of weeks. Yen pairs, Pound Yen, Euro Yen. I've said follow the alignments. There's nothing that shows otherwise. Pound Swiss, Euro Swiss, I'm bullish. So, Edge Finder carving out the same things we talked about in the flex trading room and in these sessions on directions. But yeah, I mean, I'd say if you're looking for some top setups here, I would take not just your neutrals, but go with your actual decisions, right? So very bullish to bullish. Let's take a look. Let's look at the top three. Let's go pound Aussie, pound. Let's go pound Aussie. I'm gonna write this down. Pound Aussie, CAD yen, and pound US dollar. All those scoring bullish. Okay, let's go back to the charts. So, like I said, I am interested in kind of playing both sides of the market this week in case we still have, more of that slow melt up and we can stretch another $5, $6, $7 higher. The expected move for the weekly time frame. Let's go weekly. Expected move for the weekly. And again, Nvidia kind of saved the price last week with this green candle. We had a big push from low to high. Low at 421, high at 436. Over a $15 week on the Qs. The SPY was roughly the same, I mean, $12 or $13. We had lows at 493, highs at 510. That's almost a $17 week. We're just shy of that, like $16.50. And then the DIA also stretched with a big push. That low was 383, high at 392. That's $9 with an expected move of 7. So again, thanks to Nvidia, a lot of volume came in. Markets end up finishing higher, tapping those all-time highs once again. And can we do it? Can we do it again? Well, speaking of Nvidia, this was the week. So we spent a lot of time on Monday talking about Nvidia. I had this mapped out, planned out where we'd either come down to this low or come up to the high. Guess what? We came very close to the low. That was pre-earnings on Monday, Tuesday, and then Wednesday after market, big earnings report, and it gapped higher, pushed higher, but couldn't hold that for 2 days in a row. But we did get all the way up to that expected high. So despite the expensive nature of an options play in Nvidia, it did actually, go to the high side of what I expected, which is that, $80 to $100 move. If you look at the low is 662, high of 823. So $160. That's a big, big move for an $80 to 100, $80 to $100 expected move, because we started out early, to the downside pre-earnings and then just had a big rip to the upside. Plenty was able to be made. So again, I priced it in. It was a crazy expensive option. I didn't trade it, but it was kind of just sitting back watching the fireworks. Had we done something Tuesday or Wednesday when price was selling off, that would have been, an excellent play one way or the other if it continued lower higher, and it did deliver because that low had a, huge upside. So what would have been an option that maybe cost, I mean, it was expensive. It would have been like, I think the cheapest way I could have played it would have been like $5, and that would have been going out of the money, 25 to 30 delta, doing a debit spread, maxing the profit out. So, I mean, I would have paid maybe $5 for something that would have maxed me out at 10. So it would have been maybe a $5 gain to be smart about the trade and not feel like I'm overpaying. Anyway, I didn't do it, but here we are opening another, $7 to $8 higher pre-market. Let's take a look at those top setups. Let's go with pound Aussie. Pound Aussie, 4-hour time frame. Let's go to the daily actually. If you have any charts you want to take a look at, let me know. So I am bullish overall on the pound Aussie. I am actually waiting. Okay. So here's what I like. This low, this high. Okay. I was looking to see, could we come back down and break? If we broke this structure right here, I was looking to see if we went high to low, lower high to lower low, and then I wanted to get bullish on the pound Aussie. Now, if I take a look at this objectively, we have all of this past resistance right here, and the market has been holding on the right-hand side. So if I was going to get long, if I'm following the edge finder top setups, if I get long in the pound Aussie and I put a stop loss below this level, I'm going after, reward to risk that's greater. We could stretch back up to these highs again, which is a pretty decent chunk of profit. If we go from current price to this recent high there, that's about a 360 pip move. We get back to these highs from, looks like August of 2023. We're talking about a 560 pip move. Stop loss wise, I'm looking at a stop around 160 to 180 pips. So it does make sense. I mean, we go 2 to 1 to get to that spot right there, or we go roughly 3 to 1 there. So it's a good looking setup. here's what I would, again, if I take the trade, I'm waiting down here with a swing trade. I'm still waiting to see if I can get a dip on the pound Aussie to buy. I looked at all the structure here. I was hoping we'd have a pullback into this bigger fib zone. If we don't get it, one thing we can always look to do is just trade what we see. And right now I see that, like I said, this past resistance holding, that's become support over here. Taking a buy setup, stop loss below, go after your risk to reward in favor of reward, obviously. And there's a 2-to-1, and there's a 3-to-1. So not a bad trade, not a bad setup. So here's what I'm going to do. I think what I like is if I take a trade here, I'm going to take one trade, and I'm still going to look at a reserve trade a little bit lower. Okay, I like the setup. I like the bullishness. But if we have another test of these lows, I don't want to get stopped out right at the lows just in case it's a little noisy. So I'm going to do a smaller trade size, level 1, enter in again with the same trade size or maybe a slight step increase if I did like a 0.10, then a 0.15 or 0.10, 0.11. And I'm still looking at this is my profit target and this is my profit target. And I'll go bullish on pound Aussie. So I do like that trade. That would be entering in around 93.80, which is current price, with a reserve entry around 1.90. So let me put this on the chart. So if I bought it right now, 1.9380, 1.90, I'll go 9015. See if we can tap that level and get paid on the spread or fill on the spread. Stop loss. I would put the stop loss. See what that level is. Stop loss probably around this 88.50 zone. Stop loss, I'd go 1.8850 to 1.8800. And then profit level. Profit level, I'd look at the 1.9900 to 1. I will go to 2,000 to be my profit target. So I think that's a pretty good looking setup. All things pointed to the upside. Yeah, scores. I mean, it measures well. It's my top setup on Edge Finder, so I want to give it some credit. It's a good scoring system, and I like the trade. So that's pound Aussie. I am going to throw in that trade. All right, so I'm going to get in here to my broker platform, throw it in. It's just faster on my phone versus logging in on the computer. So Forex positions, we're good. All right, pound Aussie, buy trade. Okay, I'm going to go after 9,900. And that is in. And then a pending order. Pound Aussie pending order at, we'll go 88, or I'm sorry, 1.9015. 1.9015. Take profit 9,900. Boom. Done. In. Cool. Okay. In. And I like it. All right. Other setup. Let's go CAD Yen. So CAD Yen is measuring bullish. I do like oil, by the way. I think oil is still a buy on dip. We pull back to $73.50, $74. I still like buying dip. Look to see if this channel structure holds. Look for support. I still like oil heading higher. CAD Yen. Well, the alignments are all bullish, I can tell you that. We just took out this recent high. We invalidated a head and shoulders pattern. We took out this high as well from back in October. Let's see here. I guess my hesitation is if we start to look on the right-hand side of this trend line, I'd like to see, again, similar to what we had before. We have a sell off and then a pop or to the upside. If we have like another sell off and it's a buy the dip, I could justify buying the dip. What I don't necessarily like is if this is, getting to some highs, showing some overbought conditions. I don't see anything right now though. I mean, I'm not getting divergence, I'm not getting overbought conditions. If I turn this chart over here on, we're not quite overbought. We're not quite divergent. Weekly and daily time frame, still the same situation. So yeah. Um, I mean, is anybody surprised if the Japanese yen gets weaker? Probably not. The stock market goes higher, dollar gets weaker, yen gets weaker. But if we start to top out, round out, break some trend lines, I'd say we're certainly vulnerable on the stock market for a bit of a sell off or at least a correction. Again, I don't want to say sell off and make it think like, oh, that's going to drop 3, 4, 5%. Healthy correction, buy the dip, right? Um, it's gonna have to turn ugly fast for me to justify like, oh boy, we're talking, maybe a deeper correction. If we get back below all time highs, from previous all time highs, not now, obviously, because we're at all time highs. If we get back to the 2021 all time highs, if we get back to that level, that's past resistance should become support. Then I'd start looking at, okay, maybe we have a cup and handle that's forming a top. Maybe we have a head and shoulders, something very ominous at the top. Until then, I think it's just, looking to buy dips and stay in the market. Okay, so CAD yen setup. Stay with your alignments, which I said right now are bullish. If you're a trend trader staying with alignments, then you're getting long. Your stop loss is pretty tight. I wouldn't flirt with a big stop loss in the CAD yen. I think the structure to me has already been pushing. I like pound Aussie better, so I'm going to stick with that one for right now. But yeah, you can buy on the trend and get a tight stop loss in to see if the trend continues. Pound US dollar. So this would be. So I got stopped out in the trade when we have that dollar break. I looked for a pullback here on the pound, got in, stop loss into the CPI candle, got stopped out at 27 right there. So I got stopped out at 2,700 on the pound dollar. If this low holds, this is what I would say. You're buying pound dollar to head back up to the yellow box highs. If it breaks above there, the nice thing is my target would be 1.30. It'd be like 29.50 to 1.30 for bullish. Now, I do think we need to consult the DXY or the dollar index for this. Okay. So we are looking at the right-hand side of this trend line. This is one thing I want to be careful about. So before I would justify, the technicals on the pound US dollar for a buy trade, I would say this. We have this low, we have this high. If the dollar index is above this level right here, I would be long the dollar, not short the dollar. If the dollar is down below this low, we're probably going to come in and eat this news candle out. That sounded terrible. Sorry. It's going to take away. It's going to take away this pocket, and we're likely going to drop into this yellow box low at 102.80 or lower. All right. So let me put a couple levels here. Let's mark some levels on the DXY. So we had that little spike up. I like this indecision here. We've had a lot of chop on the dollar. I mean, the last couple of months, I mean, outside of this is FOMC and CPI working together to push this a little bit higher. I thought the structure was there. I had said this in the last, several weeks in webinars. If we stay above the yellow box, I like pushing higher. We get back into the yellow box in this range, then, yeah, we're going to possibly reverse. But there's still strong support in this area right here and right here. Yes. So I think to the upside, the trade's pretty straightforward. We break above, let me find that exact price. We break above to be safe, 104.15. So mark that here. 104.15, or I'll put greater than 104.15. I would look bullish. And if we get below 103 and a less than 103.10 would be bearish. Okay. So it's right below this alert and right above that. I'm going to set an alert at that high. That's that 104. I'll go 104.15. 104.15 to the upside. All right. So this would influence my trade on the pound dollar. If the dollar index pushes lower, pound dollar looks good. CCJ crossing 40. I want to check that out. We do have some earnings this week that I'll highlight in just a moment. So price breaks 104.15. If that's the case, I'd probably take another stab at selling the pound dollar in the short term, or look at other dollar crosses. We could still have, this would be dollar strength. So I'd look for Aussie dollar to sell. One thing that's interesting is think about the setup we had on Edgefinder. Pound Aussie bullish. One really good trade that comes out of this is maybe it gets a little noisier on the pound US dollar, but we could sell the Aussie dollar instead, right? Think about that. We're looking at pound Aussie bullish, and then the Edgefinder's looking at pound dollar bullish. But if the dollar shows strength, well, this is going against the Aussie, so why not take a strong dollar index and sell the Aussie? So Aussie dollar might ultimately be my trade that I look at instead of pound dollar right here. So this is a daily, this is a 4-hour time frame. 4-hour timer is fine. If I use this chart alarm or trend line right there, breaking the trend line, I kind of like Aussie dollar now, honestly. Sell stop above. But like I said, I don't want to get too early. I don't want to get in too early. The dollar index hasn't proven it. The sell off, the confirmation really hasn't shown up yet. So I'm gonna wait because of the DXY. Okay, I'm gonna wait. Chart alarm set, chart alarm set. That'll be my action this week based on dollar index confirmation. Okay, that's what I like. That's dollar index. We did oil, gold, and silver. Gold is hitting some resistance here. We had this indecision zone. If anybody's looking for short-term trading on gold, possibly here, stop loss above. There's a little bit more reward to risk to get back down to the bottom side of this range. And again, if we get to 2000 or lower, I would say a good spot if you're short on gold, getting to profit, put in a stop loss in break even or better, going after this, 1990 low or 1985 low. If we go lower than that with a stop loss in a break even or better, this could go break, retest, go, and we could be looking at more downside on gold. Now, again, how's gold going to head lower with a stronger dollar? If dollar gets stronger, gold gets weaker, most likely. Silver's been in a range as well. Silver at 2250, range bound. I don't like silver as much. I talked about this before. If there's a break and head lower on silver, I'm just going to scoop up some more. I'm more long term bullish on silver, base metal versus precious metal, right? So I would be buying, 1975 to 1825, looking for silver to stay bullish. But if you're not positioned like I am longer term bullish, then again, if you're selling, stop loss above. If it breaks below the yellow box, look to see if you can target this low, target this low. There's still some pockets in here to chew back into. And, $20 is a nice round number as well. But we're going to base this on the dollar. I mean, we're into that time of the season. Pre-summer pushes are happening March, April, May, and the dollar index might catch some bid. We've had a lot of good stuff priced in to the markets and a lot of optimism that, typically the market's 6 to 8 months forward thinking. Here we are at the end of February. Rate cuts are expected to be in June or so. There's about a 40-year history of the rate tightening cycles into rate cut cycles. Usually that's what starts signaling some corrections in the market. So if we don't have much of one or the market just pauses a little bit, we're going to see how that plays out. Okay. And then Bitcoin sideways right now. I wouldn't mind seeing a little bit of a pullback on Bitcoin. I've said that before. Connect the highs like so and the lows, puts us back into some halfway levels around 45,000. But I keep mentioning this. I mean, if all we see on Bitcoin is this, if all it looks like is a correction that way, just draw a trend line. And once we get a pop, I would get back in and stop loss below. It's just looking for another level to add, right? So if we're going to pull back more meaningfully, then this should probably start unwinding a little bit faster. Looking for this halfway point. That would be a target one to buy. And a second point would be the broadening pattern lows, certainly a target to buy if we hit, sub 40. Okay. But if it just slowly unwinds, let me delete this. If it slowly unwinds, then just wait for a trend line, set a chart alarm, and then I get long again. I did rotate around some Bitcoin positions. I did a GBTC profit take last week. We had a good outperformance. And what I noticed is just doing some research on the fee structures of those ETFs. GBTC has a 1.25 or 1.5 annual fee, and there's some outflows coming into GBTC into the others. Now they could be different because they could have some type of like fee forgiveness for just increasing flows. But at the very least, your structure on an IBIT, which is I think IBIT is BlackRock, and then FBTC is your Fidelity. So it's just a lower fee structure, like 0.25% as an ETF versus Grayscale. I still think I want to see some pullbacks and dips, but again, it's pretty much dollar cost averaging and just staying committed. Okay. Any other charts? Any other items you like to take a look at? I want to see what these alerts were that just popped off. I've got these. I saw a CCJ in there. What just went off? There we go. Okay. PPC and CCJ. What are those? Camco Corp. That's Energy. PPC. Pilgrim's Pride. Huh. I had a chart along there for a reason. This is agriculture. Fresh, frozen, value-added chicken, pork. Ooh, that's a big jump. It's because of an earnings play. Yep. So earnings beat top and bottom. So earnings and revenue. Let's go to the weekly time frame here. Interesting. Morning, Ann. How are you? Nice to see you. We have a pretty big channel here. Yeah, I wouldn't get too excited. Depending on, I mean, if I were to sell this, I mean, I don't know if this has options. If it does, if they're any good, probably not. But if I were to sell this, looking at like a $36 or $40 kind of peak, trying to sell a bear call spread up here, I could take a look at it. But implied volatility, I'm sure IVR is pretty low. But let me find out. Let me log into my Tasty platform here. And then CCJ was Camco. I looked at that one before. Weekly time frame. This one started to break out, coming back into all-time highs from 07. Wow. And this one is uranium. Uranium's pushing lower, which means, okay. So Camco, what's happening to our Sprott physical uranium? Oh, baby. This is going to be the pain trade. If anybody follows Harris Kupperman out there, uranium has been the big play. I've got some exposure on it. I own the shares at 26.95 right here. We're at 26.88. So I do have a put out to the 15th. That's protection at 25. So anything lower than that, I will be capitalizing on a long put, hopefully to lower my cost basis. I still want to add protection. We could be looking at something like this where, if uranium tests that high, comes all the way back down to lows, I want to be protected here, but I want to lower my cost basis, and I'm still long-term, bullish on uranium. So this is an instrument that if I want to own shares, I want some protection there. Okay. All right. Let me get logged in to my platform. There we go. Let's look at what was that? What was the chicken stock? Alerts. PPC. Okay, let's take a look at this one. So PPC. Okay, so trade. We just had earnings. Let me look and see. Ivy ranked 24. Price is up. If I go out to March, go out to April, expected move 35 by 36. Yeah, I mean, you can see the premiums are pretty awful. So there's no way I'm really going to love a trade on that one. So if I go back to this chart, I see the larger, consolidation. If we came up to like 35, 36, I'd probably look at a sell trade there. 36.50. Interesting on the weekly time frame. We've signaled, I mean, this is almost like amazingly textbook technicals. We signaled some overbought conditions. I mean, tops and bottoms both have been called just by this divergence indicator. So, yeah, I kind of look at the same thing. We get into overbought conditions around $36, $37. I look for a short, but I'll set a chart alarm first and just, I guess, keep an eye on this one in the background. Otherwise, combination of looked at some dividend champs last week, some dividend aristocrats, just looking some at these tasty trade scans. If you want to go into high option volume, so you look at some of your liquidity pushes, your high IVRs. Dell had a big pop to the upside. NIO's Chinese EV JD. I'm looking at buying some shares of JD, or at least looking long in this one out to the next like 9-10 months. So I'll pop around, take a look at some of these, see if there's some good trades. Otherwise, I need to start getting position on the index. So if I take a look at the SPY, March 1st, I've got some trades in already. We're trading here at 508, 509, 508.50. If we stretch up to 515, let me see here. Probably looking in the works of like a 513. If I sell the 513 and I buy the 510, buy the 516. Let me increase this has to be 2 contracts. There. So it's going to cost me about 47 cents. It's a 6-to-1 if I take that trade for this week. That's a little expensive. I like these debits to be like, 20 cents, 25 cents. Maybe if I go out a little bit further, 514, 517 by 511. A little bit cheaper, not much though. So probably that. If I looked at like a 515, before I call a butterfly spread like that, what I do have, if we have just a gargantuan drop, I mean, all the way down here, these are likely not going to be profitable. Most likely, those are put butterfly spreads. Those are probably not going to work. Those debits are whatever. It's going to cost me like 50 to 100 bucks. But if this current price trading at 508.50, if we drift back into this, 504, 503 zone, these are my sell strikes and pin prices on the butterfly spread. So these are both offering like a 9-to-1, 10-to-1 reward. If this is by Wednesday, Thursday with PCE data, then this will probably be paying out like 4 or 5-to-1. So if that's the case, great. But I do think I need to have something in here to the upside. I can also just entertain a couple of inexpensive debit spreads if I go out to next week as we kick off the month of March. The first is a Friday, so if I went out to the 8th, go out another week, and let's say a 510. Let me clear the trades here. If I do a 510, so let's say I buy the 510 and I give myself, $5 of upside. I'd pay $2 to make $3. I think that trade's fair. If I were to also buy the 510 put, which should be inexpensive, it's not actually. That's interesting. So buying the call is 386, buying the put's 458. So when I move that by $1.02, now it's about the same cost. 508 by 503. So if I did both directions, I've got $5 max profit. My weak spot would be between 508, 510, which means for the next 2 weeks, we'd have to stay between 508, 510. If we're below 503 or above 515, I'd make $5, walk away with a $1.40 profit, probability to profit 70%. I'd like to skew this a little bit more in my favor. Maybe the upside is tighter. Maybe on the put side, we go a little bit lower to give ourselves a bigger max profit. So that would be better, where I'd have $5 of upside here for a trade that cost me $2. So $2 to make $3. This one would be, if I pay for this at 360, sell it for $1.36, that's going to be $2.30. So I pay 230 to make 10. So probably how I'd position for it, or give myself just a little bit more potential here. That's $6 different, 385 to make 5 or 6. I like that a little bit more. Let me take a look. So I'm debating that. We've got class at the top of the hour for equities on demand. The Qs, the SPYs, that's what I'm probably going to end up trading. And we're at 508. So butterfly spread's cheap. It's pretty inexpensive. If it works out, it works out. You just have to be right with that pin price in those ranges, as well as the time. I mean, the closer it gets expiration, the more valuable your sell side is worth if you are getting close to that pin price. So, and of course, there's always single day expirations in 0DT. But a lot has to line up for that. Maybe maybe Thursday, Friday, the market has a little bit more of a expected move. We do have a lot of earnings this week. We have like 600 some companies with earnings, 634. Some of the notables I thought were interesting that I'll be watching. I have some exposure on Norwegian Cruise Lines. I own some of the shares. Let's see here. What else? Baidu, I own the shares, or I have a bunch of credit spreads in. So BIDU this week, China's been up off the lows. Snowflake, that's in the tech space. MARA, that's a Bitcoin related. That's a miner for Bitcoin. So I'll point these out right here. Let's go highlighter. So I'm looking at what I say NCLH. So this is Tuesday before market. We have Baidu, which is before market Wednesday. Snowflake, which is aftermarket. Marathon aftermarket Wednesday. Retail Best Buy. Polestar, that's an EV play. And Anheuser-Busch, just like it's kind of like Coke and Pepsi. Fisker's EV. We saw some, I think it was Rivian last week and Fisker last week. Like none of them were great. Lucid last week. So, I know there's 634, which is a lot. That's kind of your final hurrah to wrap things up for Q4 earnings. Couple I'm interested in. So, like I said, I'm watching Baidu. I'll watch Snowflake. I'll watch MARA. We'll look to see what Snowflake has done in the past. There might be some good volatility. Maybe I take an earnings play on it this week. Other than that, I'll just kind of sit tight, trade the SPY, watch the Qs, trade the Qs perhaps, trade the DIA, watch the Russell, and see where things are going to fall. IWM trading at 200. We're still having a hard time breaking this 205 level. And I still want to see if, this again, it kind of leads to the broad market. If the IWM, breaks above 205, is that the broad market where small cap catches up? That's what happened for that November, December rally. We're looking to see if there's some more follow through there. Otherwise, it could just be choppy. Qs, big tech, watching to see if we turn over with the divergence indicators, which wouldn't surprise me. And again, maybe it's not this week. That's the hardest part is I'm looking out, right now, if I give myself, and this is probably something we have to talk about for equities on demand, is maybe it's not about being right this week, right? Maybe it's if I look at prices now and I give myself, either I look at, way out of the money, way up here at, this is the Qs, but if I did like something, 30, 40, $50 higher, if I can get enough premium for it, take an 85% probability to profit, I can just do a bear call spread way up here and do a bull put spread way down here. And if price falls, then we can look at like the 5%, the 10%. If we get to those levels, then yeah, we'll talk about, buying some bull put spreads. So anyway, it doesn't have to be hard. I just think the hard part is trying to call a top, trying to pinpoint these numbers and technicals for this week. And that certainly makes it a lot. That makes it a lot more challenging. John, that's not me selling the robots. That's a company that I work for that sells the robots. If it was just me selling robots, I'd sell the robots for like $100. But there's education, there's account reps, there's, HR, there's accounting, there's 150 people that work for the company. And that's why they charge what they do, but Every robot that I build, every course that I've created, I mean, they work, and I'll teach you how to use them. So, all right, let me do this. Let's go. I'm gonna check and see. Okay, so I was just asked. I'm gonna make a note here. So if anybody's watching me, that's in Equities on Demand. I just got a heads up from A1 Trading. We're gonna go live at 10 o'clock, so I will post in my Discord. A1 Trading session at 10 a.m. Eastern Time. I'll be live on my YouTube channel. Okay, so I'm gonna let Chandler know that I'm joining the team. All right. So I will wrap this up here in just a few minutes. So we did the dollar, we did oil, we did gold, we did silver, we did Bitcoin, looked at some stocks, looked at the indexes, top setups in Edgefinder. I'm just going to continue on, kind of have another, you know, 30 to 45 minutes to spend with everybody. If you want to join me in that 10 o'clock session, I will also probably start looking to see if I can get some positions in for I have some expirations already out on the first. What I might end up doing is looking at an upside expiration on a butterfly spread for the first that covers me here. I noticed that's probably like a 6 to 1, 5 to 1, 6 to 1, which is okay, but that's still enough to cover if I don't see any bearishness this week. That at least covers the cost if we get close to price on Friday. So I'll look at those expected moves and see. And it's going to cost me money. If I lose, I'll probably lose 40 cents. But if I win, it pays $2.40, $2.50, which again, I think that reward to risk is worth having, or at least considering. If I am right on the original March 1st trades we do have some butterflies pinned in here on the call side and some butterflies pinned in here on the put side. The put side likely is too far away for this week's expiration, but we could certainly come back in. If we fill this NVIDIA gap, then there's going to be some pretty nice profits to consider this week. So chart alarm set at 431. That was a bear call, or I'm sorry, bear put. If I go into the first on the Qs right here, I have on the Qs 420. So the call side, I mean, actually, what's this trading for right now? 437. This is current price. Let me see what this is trading for. So the 437.50, we're trading at 437 right now. Let me see if this is in the money. I think it's up. It's up like 100%. The debit, I think initially was like 16 to 20 cents. Man, it's just time. That's a bummer. I might have to put another butterfly put spread in here. So I'll play around with it. I don't want to rush this over the next couple minutes. I've got 10 o'clock session. Just let me take a breather, figure out how I want to position for this. We'll talk about it at 10 o'clock. Just come back on the YouTube session. Okay. I will. I'll wrap this session up. It'll show up. It'll record an archive on my YouTube session. I'll church those up later with the thumbnail and stuff. But just give me 7 minutes. I'll be back on my YouTube session. So youtube.com/Chris Pulver. I'll go live again in the next few minutes, and I'll see you shortly. Okay. All right, buddy. That goes for everyone in Equities on Demand. Just come back to the 10 o'clock session with me here on YouTube. All right. I'll see y'all soon. And Sergeant, come back as well, and I'll answer that question. We'll talk about it. All right. See you shortly. Thanks. Bye.